The world has changed a lot in the last couple of years, and if you haven't changed your financial strategy to keep up, you may be doing it wrong. In today's video, I'm going to give you the top 3 things I think people should be adjusting in light of the changes in the last couple of years. Hey everyone, I'm James Conole, founder of Root Financial, and I'm here to make sure you get the most out of your life with your money. We have gone through a lot in the past couple of years, and you don't need me to tell you that. Life looks very different now than it did even just 2 years ago. What I'm seeing is this is leading to opportunity to make sure that your financial strategy is in line with changing times. What I want to do today is go through the top 3 ways I'm seeing people adapt to these changes, and more importantly, incorporate these changes into their plan so they can make sure they continue to get the most out of life with their money. The first area I see change happening is with people's retirement strategy. People are burned out. People have been working long hours in the shift to working from home and the shift to working everywhere. You're just always on. So people are burned out, people are tired, people are stressed. And what I'm seeing more and more and more of is people less focused on can I work as hard as I possibly can until 65 or 66 or 67, and instead take an approach that more fits their lifestyle. It used to be take the high paying job and do it as long as you possibly can and then retire. And then you get to enjoy the fruits of your labor, and then you get to spend, and then you get to enjoy. But that's not working anymore. Too many people are too burned out, too stressed to continue doing that. But here's the good news. They don't have to. They don't have to continue working those high-paying jobs and giving it everything they got to still have a really wonderful retirement. They just need to adjust their strategy. Here's how that works. A large part of this has to do with compound interest. So compound interest is a wonderful thing, and let's see how it actually works so we can tie it into how is this changing people's retirement strategy. So let's assume you have $10,000. You just started investing, you put $10,000 into the market, and you grow by 10%. Well, your $10,000 turns to $11,000. So you got $1,000 of growth, not bad, but it's certainly not going to be life-changing in terms of your ability to retire. Well, let's assume you keep doing that for a number of years. You put in $10,000 this year and next year and the following year, and you keep doing that and you keep getting growth, and then one day you have $1 million in your portfolio. Well, now, if you have $1 million and you add 10,000 more, that matters, but it's a 1% increase in terms of your total portfolio value. It goes from $1 million to $1,010,000. So it doesn't move the needle that much in terms of your total portfolio value. Here's what does move the needle: growth. This is why compound interest is such an incredible thing. If you now have $1 million and you get 10% growth, that's $100,000 of growth. So in your first year, when you put 10,000 in, you got $1,000 of growth. But once you have $1 million, you have $100,000 of growth. Well, that's really cool, but here's how this actually applies to your retirement, and this is what's applying to helping people craft a retirement strategy that works for them. Let's take a look at an example I see quite commonly. You may be in a high-paying, high-stress job, and you say, you know what, I can maybe stick with this for 2 years, 3 years max. It's just taking too much of a toll on my health, on my relationships, on everything else, but I can give it 2 or 3 more years. Well, if you're doing that, maybe that high-paying job allows you to max out a 401k and do some other savings. Well, what if the alternative is take a much lower-paying job, something that allows you to pay the bills, but also something that's not going to burn you out so soon? Something that maybe you could stick with for 6 years as opposed to just 2 or 3 years. Well, believe it or not, this might actually be better for you financially. Not just from a health perspective, not just from a lifestyle perspective, not just maybe it's better for you overall as a person, but better for you financially. And it all comes down to that concept of compound interest again. And here's why. Let's say you are continuing in the high-paying job for, say, 3 more years. Let's give it the benefit of the doubt that you can stick with it for 3 more years. And maybe you're maxing your 401k, you're getting a little bit of a match, you're putting some money aside in savings. Maybe you're saving $40,000 per year, which is a pretty significant savings rate, but you're only doing that for 3 more years. Let's assume in this other alternative, you're not saving at all. But in both of them, you have that $1 million that we talked about. Well, if you do this, you're taking $1 million here in this scene, and what you're doing is you're really working and you're stressing and you're adding to it $40,000 per year, but only for 3 more years. Where on this side, you also start with $1 million, you're adding nothing to it, but that's okay. Because growth on your portfolio is going to be significantly more than you could add of your own doing. That's compound interest working itself out. And by continuing to do this for 6 more years, as opposed to giving it everything you got and squeezing a little bit more into your portfolio, this person's much better off. Their $1 million had more time to compound. And if you remember, if that $1 million grows by 10%, that's $100,000 per year. So it's getting much more growth just on the compounding than you could possibly put into it. This is the shift I'm seeing people make. They're stepping back from the high stress, high paying jobs. They're finding something that aligns more with their lifestyle, something they enjoy, something they can do while also enjoying family time and lifestyle. And it's actually better for them financially because they're not hitting that wall. They're not burning out. They're able to do it for longer. And because they're able to do it longer, their portfolio can continue working for them. And it's actually putting them in a much better spot, not just in the future, but also today. That's the first big shift I'm seeing people make. The second big shift is with regards to tax strategy. So markets are down in 2022. This is something that happens fairly regularly. We just haven't had a prolonged bear market for some time. We had a very brief one in 2020, but we very quickly recovered. This has been the longest one we've had since 07, 08. Now, when this happens, you can do one of two things. You can sit back and say, oh my goodness, this is getting in the way of my ability to retire. This is so awful. Why is this happening to me? And you might be a little justified in saying that, but the reality is that attitude is not actually going to help anything. The best thing you can do is, can you tax loss harvest? Can you rebalance? Can you implement Roth conversions to convert things when the markets are at a lower point? If your estate is over the exemption amount, can you start gifting now when asset values are decreased? The reality is, down markets are temporary. They're also painful. But down markets offer the best opportunities to do the right planning today that will really pay dividends for years and years and years to come, especially with regard to taxes. So as this stuff is happening, you want to make sure that you have a plan in place that accounts that this is a very real scenario that's going to happen regularly for the rest of your retirement. But how can you take advantage of it? How can you take what's been given to you and flip it to your advantage? Tax strategy is a big way you can do that. Tax loss harvesting is, can you sell some funds in a brokerage account to lock in some losses that you can use to write off against future gains? Don't buy the same exact funds again for at least 31 days, but buy a similar fund. So you're not selling and getting out of the market, but you're selling, shifting to a similar fund so you still participate when the market recovers, but now you're booking losses that you can use to write off against gains for years to come. Roth conversions. I've done plenty of videos talking about the benefit of Roth conversions. Well, all else being equal, would you rather convert your Roth when things are down or when things are high? If it's me, I'd much rather do it when things are down. When things are down, I can convert more shares without exceeding certain dollar levels that I want to convert. So this is a great time to say, can you start to shift that? So all the future growth that happens, it's happening in a Roth IRA, which is completely tax-free. So those are some of the things that you can use to actually take advantage of years like this. So as the world is shifting, as things that are happening that people don't look at as typically positive, in the short run they're not positive, but how can we use them to our advantage long-term by doing the things that really matter today? The third area that's really changed is your protection strategy. Many people over the last couple of years have experienced health problems or have had family members or friends pass due to what's happening in the world here. Now, this has brought the preciousness of life and the reality of life very front and center in terms of what we're focused on. This is something that we need to be mindful of. We can plan retirement all day long. We can talk about 401ks all day long and tax strategy and all these things that need to happen. But if we don't have the right protection in place, that plan could very easily be derailed. So how do you protect yourself? How do you protect a spouse? How do you protect family? Well, you have the right protection strategies in place. For most people, that comes down to, do you have the right life insurance? So some people, once you've been working long enough and have enough in assets or income, you maybe don't need life insurance. If something happened to you, your family would still be okay. But many people don't yet have that. Many people do need life insurance so that if something happened to them, their family would be okay. They'd be able to replace lost savings, lost assets, and do so in a way that their family could continue to be okay, even if something happened to them. Disability insurance. This is sometimes actually a bigger risk than life insurance is. Life insurance, if you pass, your income is gone, and of course it's tragic. But if you're disabled, well, what happens is that's also tragic. You no longer have income, and your family also has to provide for you, which is going to be a big expense. That's why disability is actually much riskier in many cases than actual passing is. So do you have the right disability insurance in place? If something were to happen to you and you could not work, do you have coverage that would allow you to pay the bills, would provide for your family so that you would still continue to be okay, even if your income went away? Emergency fund. This absolutely is part of your protection plan. And I think people are realizing now, more so than they have in many years, they need an emergency fund. The world is not going to move in a linear, predictable way. There's going to be things that come up in terms of the economy, in terms of just what's happening in the world, in terms of your job and what's happening in your life. You need an emergency fund. Some people don't like having an emergency fund. They say, why would I have cash here that's just sitting doing nothing? Well, don't think of it as an investment. Think of it as protection. Think of it as insurance. You have the emergency fund, so if something happens to you, you don't have to dip into your 401k and pay penalties and taxes to cover your bills. If something happens to you, you're not going to have to go into debt that's going to have a high interest rate and be really difficult to dig yourself out of. That's what your emergency fund is for. Once it's there, it allows you to invest in a way that's right for you. It allows you to live and work in a way that's right for you. But without it, you're very vulnerable to what life might throw at you. And then lastly is your estate plan in order. Your estate plan doesn't have to be fancy, it doesn't have to be complicated, but we need to make sure, do you have a trust and a will if needed? Do you have the advance directive? So if there's a health event or a financial event, do you have the right people in place that would be allowed to make decisions on your behalf and know what decisions you would want to be made on your behalf? So a trust and a will and advance directives, that's all part of an estate plan that's designed to, yes, protect you, but also protect family. So if something happened to you, would there be a seamless transition? There's going to be enough for them to worry about without you. Let's make sure finances aren't part of that. So as the world changes, is your financial strategy changing? The goal of your finances is always to support the life that you want to be able to live. Your money is a tool. And as that life that you're living changes, are we adjusting that tool? Are we adjusting the financial strategy to make sure you're making the most of it? So whether it's changing retirement and what retirement looks like, whether it's making sure that you're using tax strategies to keep up with some of the downturns in the market, or whether it's understanding the need for protection and making sure those things are implemented, all are very crucial, especially in a time like this, to make sure you're staying on top of it. Now, if you're listening to this and saying, geez, I'd really like to know more about those tax strategies so I can see, can I implement those? Make sure to check out this playlist above where I outline them in more detail. Once again, I'm James Conole, the founder of Root Financial. If you're interested in seeing how we help our clients at Root Financial get the most out of their life with their money, be sure to visit us at www.rootfinancialpartners.com.